Hello traders, hope you're doing well. In recent time, many people have started to show interest to trade in the crypto market. Now, if you're watching this video, either you are a beginner, you have started to trade in the crypto market, or at least you have interest to trade in crypto. Now, in the initial stage, when you start trading in crypto, there are certain important things that you need to know. For example, which instrument should you trade? If you enter a trade, what should be your risk? What should be your reward? And how brokerage is calculated? These are some of the important concepts that you need to know before you take your first trade. Recently, even I have started a crypto community where everything I'm sharing for free. Let it be setups, courses. Now this video, what you're watching right now, this should have been the first video for my community members. But this concept, everybody has to know. So that is why I'm going to make this video public so that at least you get a basic understanding of the important concepts that you have to learn before you start trading in crypto. I'm not going to discuss what is crypto, who introduced, because all those things is not required. For taking a trade, what and all you need to keep in mind. That is all we are going to discuss. Alright, so without further delay, let us start. Now traders, we are on the homepage of Delta Exchange. Why am I using Delta Exchange? Because all of our community members have account with Delta Exchange, so they can relate whatever I say very easily. Even you can become a part of our community by opening an account using our referral link, where you will be getting 10% discount on brokerage. Second, every day you will be getting setups based on price action. So this is going to be absolutely free of cost. And third, you will be getting a course based on price action, specially designed for crypto market. All of these benefit you will get when you open account using our referral link. Now, if you want to become a part of our community group, you can do that by opening account using our referral link. The link is shared in the description box below. You can check it out. Now traders, if you want to trade in crypto market, you have two choices. One, you can either trade in crypto futures or you can trade in crypto option. Now what would I suggest? I would suggest everyone to trade first in the futures market and get comfortable with crypto trading. Now in our Indian market, why don't we trade in Nifty Bank Nifty futures? Because the margin requirement is more, capital requirement is more. But when you trade in Delta Exchange, you will be getting margins, so the capital requirement is less. When you can trade in the futures market with less capital, why go to options? Of course, in the future for options market also, I'll be launching a course that also for free. I'm going to give it to the community members. But initial stage, trading in future market is better, because here only thing what you need to be correct is about the trend. You don't have to worry about time decay and other things like option buyers. And since crypto market is volatile, even if you sell options, easily 200-300 points movement can happen. So as an option seller, you can make losses. But in futures market, once we identify the direction, when we take entry, we stick to our rules. What is the stop loss? What is going to be the target? Based on that, when we trade, our risk can be managed. Okay. That is the reason we are going to trade in the futures market. Now the first question is answered. Which one we should choose between futures and options at this point of time? As a beginner, you have to choose the futures market. Now if you want to trade in the futures market, which instrument should we trade in? I will explain that now. Now here I've gone to the section called market. As of now, we are going to ignore the options market. We are going to trade only in futures market. You can see there are two instruments here. One is Bitcoin, other one is Ethereum. So these two instruments are very popular, and here you will find more liquidity. Market momentum will be high in these two. So at the initial stage while trading, you can trade in BTC and Ethereum. Here you can see 200x, 100x, right? All of this is leverage what Delta Exchange will give you to trade. So now you have understood you have to trade in futures market and which instrument you can trade in. First is BTC, other one is Ethereum. The Solana also you can trade, no problem. Now what is the next step? Let me open BTC chart. Now you will be taken to this interface. Okay, don't worry about this indicators. This is for the course. Anyways, I'm going to share it with you. As of now, I'll remove all this drawings. Now I think the chart is more clear for you. Now in this chart, you can see there are three things. One is the chart itself. Here you can see this section. This is where you will be placing your buy or sell orders, and then you have this section. Once you place your entry, this is where you will be able to place stop loss and target for your trades. Now when you are in the screen, things might be looking a bit different for you, where maybe the chart here, the size would be more, and this section would have gone to the bottom. This position section would have gone to the bottom. You can customize all this. Simply what you can do, you can come here, hold it, drag it this side. Here you will have the hamburger icon. You can arrange it the way how you want. But for me, This is how I want to keep the interface. One is the chart, second section is to place order, and third section is to look at my orders, what I have placed. What is the first thing that we need to take into consideration before we take any trade? The risk involved, right? We are going to put in our money. We have to know what is going to be the risk for each trade that we take. Traders, the chart what you're seeing right now is BTC future market chart. Now when you trade in futures, only your view of the market has to be correct. So let's say you think from here Bitcoin will move towards the upside. What you will do? You will place buy order. Or if you think Bitcoin is going to fall from here, then what you will do? You will simply switch to sell, and here you're going to sell. This is very basic thing. Now here you can see in this account I've kept around 27 to 30,000 because I want to demonstrate things to you. Now the next important section here is, let's say you're thinking Bitcoin from here it will move up. So you can either place market order. That means as soon as you click on buy, choose how much quantity you want, you click on buy, the buy position will get executed. Now instead of market order, let's say you want to place a limit order. Limit order means what? You are going to decide at which time you want to enter. Now let's say you want to place an order here when market breaks this level. So what you can do, see this best offer. When I click here, the best offer changed, right? So you can choose this, choose the quantity that you want to trade, and then you can execute the order. So that time what will happen, when market comes to this price only, your order will get triggered. Now traders, while trading in crypto, one of the most important thing is the leverage that you choose. Your broker is giving you leverage, but if you take too much leverage, you can get into trouble. If you take very less leverage, you will get into trouble. Then what is the right leverage that you can take? First, let me explain what is leverage. Then I will tell you how much leverage is the maximum you can take as a beginner. Now here, let's say I'm taking only 1x as leverage. This means here you can see, right? I have 27,000 rupees. Usually the crypto trading happens in dollars. So if you convert it to dollars, it is $323. Now, if I'm not taking any leverage and if I want to trade in just one BTC, what is the margin required? It is $67. So around $320, $330 I have, right? If I want to trade in 5 crypto, it will say insufficient balance. So even though I have 28,000 rupees, I can't even trade with 5 units with the capital that I have. This is when we need to make use of the leverage. So I remove this and I take 10x leverage and I set it. Now my leverage has turned to 10x. Again, if I choose 5 quantity, the margin required is how much? Just $33. Previously it was saying insufficient balance. Now it is saying $33. That means I can execute this order. How am I able to execute? Because I'm taking leverage. So when we take leverage, we can increase the quantity. Now let's say I want to trade with 100 units. It says the margin required is $672, but margin what I have is only $300, but the margin what I have is $320. Now let's say my leverage from 10, I will change it to 25x. I set it as this. So now the margin requirement is changed. Only $266 is required. I already have $320, so I can place this buy order if I think market will move up from here. So without taking leverage, we cannot trade in crypto market. But what is the maximum leverage that we can take? If you ask me, at the initial stage, the maximum leverage that you can take is 25x. Don't go beyond that. As I keep explaining things, you will understand why 25x should be the maximum leverage that you take. Now, when we trade in Nifty and Bank Nifty, we trade in lots, right? For Nifty, it is 25 lots as of now. For Bank Nifty, it is 15 lots. But in crypto, when you trade in the futures market, you can even trade with 1 unit, or you can trade with 10 units. You can decide. You can also trade with 1000 units, but you should have sufficient balance. But if you ask me as a beginner, what should be the maximum units I choose? According to me, 100 units should be the maximum unit you decide to trade, because at the initial stage, you're trading in dollars, right? That time you should know what is going to be your risk for your trade. For 100 units, what is the profit you can expect? What is the loss you can expect? All of these things you can calculate. Once you get adjusted to this, only then you can increase or decrease the lot size. Even if you want, you can trade with 50 units. But later point of the video, I will tell you why not to go below 100 units. Okay. Now, manually I have typed 100, but here you can see 10, 25, 50, 75, 100. So here you can see the count is changing. Either we can type manually or we can see how much percentage of leverage we want to take. Only 10% leverage means 11 units, 25% of the leverage is 29 units, 75% means 87 units, 100% means 116 units. Now instead of 25x, let's say I choose 200x. That is the maximum leverage the broker gives. If I set to this and if I choose 100%, I can take up to 799 quantities. Many people, the biggest mistake what they do, they take the maximum leverage, they trade with maximum count. One wrong setup. If you have entered with 30,000 capital, everything you can lose within one trade itself. So at the beginning, I would suggest you to only stick to leverage as 25x and the units you just stick to 100 units. This is the maximum leverage I would ask a beginner to trade in, and the maximum should be 100 units or this 100%, 116 units. This is what you need to choose. Later, when you get comfortable, when you get confident, when you start making profits, then you can easily increase your margins based on your experience. But initial stage, 100 units is more than sufficient and maximum leverage should be 25x. So till now, what and all we have learned. Trading in futures market is better as a beginner. Second, leverage if you take, don't go above 25x. Manually type your units, let it be 100 so that you get easy calculation. Now the next topic which I want to discuss about is what is going to be the risk for each trade and what is going to be the reward. And also I'm going to discuss what is going to be the brokerage. In this case, let's say I have taken leverage as 25 and I have taken 100 units. I've not done any analysis here. Just to show you, let's say I execute this order. So what is the margin required? Margin required is $266. I have $325. So I can execute this order. Now let's say I think market will go towards the upside. I've not done any analysis. Just to show you, I'm going to place this order. Okay. So I have placed. Now before I place this order, you can see something called liquidation price, right? This section. Now this is a very important thing. Sometime back I told you cannot take too much leverage, right? Why you should not take too much leverage? That is because of the liquidation price. What is liquidation price? I'll come back later. But now let me just place this order. Okay. So you can see my order has been executed and where is my entry? My entry is here. Now when we trade in Indian market, we trade in rupees, right? Our profit will be in rupees, loss will be in rupees. But if I'm trading in the crypto market, my profit and loss will be in dollars. Now, how do I calculate what is going to be the risk? You can see already $1, $1.5 is the loss. Now, how do you determine your risk? You go here. I have taken buy position. So I choose this. This is my entry price. Now, how do you calculate your risk when you trade in BTC? I will explain to you in very simple manner. If I keep my stop loss, for example, as 100. This means if market moves down by 100 points, 100 points is my risk, right? I will lose $10. Same way, if the market moves up by 100 points, my target is around 107. So if the market reaches this area, my profit will be 10. How much? $10. Okay. So if market moves down by 100 points, my loss is going to be 10. If market moves up by 100 points, then my profit will be $10. Okay. Now let's say I change my target to 200. So here my risk reward will be 1:2. Risk is 100 points. That means $10 is the risk. Target is 200 points, right? So if the market goes as per my direction, I will make $20. Now what if market make a movement of 300 points? What is going to be my profit? It is going to be $30. So from this only you need to understand, if you have taken a buy trade, every 100 points the market goes as per your direction, your profit will be increasing by $10. Every 100 points, if market goes opposite to your direction, then you will keep losing $10. So to summarize, let's say in this case, my stop loss is 200 points and my target is, let's say, 400 points. So in this case, what is going to be my risk? My risk, because I have taken 200 points, 200 points is equal to $20. Okay. So in simple way, 200 points movement means you will lose $20 if market, after you take entry, if it moves up by how many points? In this case, 400. Okay. If it moves by 400 points, then you will be making $40. Now traders, here you can see I have kept stop loss as 200 points, right? So as of now, the loss is around $15. So when it comes close to 200 points, that is where I will be seeing a loss of approximately $20. that is where I'm going to book my loss. Okay, what is the PNL? Around $17 loss it is showing. So when it comes to close to 200 points, I will see a loss of somewhere around $20, because for 200 points, $20 is the risk. You can see when it's coming here, 19.5, around 20. Okay, now let's say I close my position. Simply by clicking here, I placed my exit because market went opposite to my direction. Now traders, the trade which we took, how much was the stop loss? It was around 200 points. When you trade in Indian market, when you trade in Nifty and Bank Nifty, we usually give 30 points, 40 points as risk. But when you trade in crypto market, you can see easily the movement will be close to 200 points down, 300 points up, 400 points down. So volatility is huge in crypto. So when you trade in crypto market, to a certain extent, you should be ready to give at least 100 points risk for your trade. I'm developing a course for you guys, right? In that, the risk what we are going to take is 100 points. 100 points means what is going to be the risk? It is $10. And for that, what is going to be the reward? 200, 300 or 400. Based on the market condition, we will decide that. So every time the risk reward for our trade is going to be more, so that even 50% of the time we are correct, we will be making very good profits in the market. So for you also, whichever strategy you're trading, always ensure you cannot plan for 1:1 risk reward. Also, you should remember, since the crypto market is very volatile, you cannot take 20 points or 30 points as risk. Easily your stop loss will be hit. A reasonable stop loss for your trade will be at least 100 points. Now just to show you, I executed this order where market moved down by 200 points. If market moves down by 200 points, this means I have lost $20. Is this the only loss which I'm going to take? No, right? Apart from this, I have to also include brokerage. How much is the brokerage? To know that, you can go to fill section here. On 22nd October, I placed 100 unit buy position. After market hitting my stop loss, I exited. So $3.5 is the brokerage for my entry trade and $3.5 is the brokerage for my exit trade. So in total, approximately $7. So the overall loss for me for this trade is around $27. Now when you trade in Indian market, almost all broker, what they say, 20 rupees is the brokerage for each trigger. So for buy position, 20 rupees. When you exit that position, that is one more trigger, 20 rupees. So overall brokerage is 40 rupees. They don't care if you're trading with 5 lots or 10 lots. Brokerage is going to be the same. In crypto market, it is not like that. The brokerage is calculated based on the quantity. So for 100 quantity, for entry $3.5 and for exit $3.5. So total brokerage will be around $7. Now traders, from this you should have understood, for every 100 points market moves opposite to your direction, you will keep losing $10. Every 100 points market goes as per your view, you will keep making $10. Apart from this, you have to also pay the brokerage. So in this case, 200 points market moved. For the trade, I lost $20. My brokerage is calculated based on units. So for every 100 units, my brokerage will be $7. So $27 will be the risk for this trade. If the market had moved up, here we had kept risk reward around 400 points. So if the market had gone as per my direction, here in this trade I would have made $40. From this, $7 is the brokerage. So around $33 would have been my net profit. This I'm saying 400 points up move, 200 points down. Now many of you, after looking at this risk reward, you might tell me, sir, the brokerage here is too much. Right? In Indian market, only 40-50 rupees we are going to pay as brokerage. Here brokerage is too much, right? But let me tell you, if you know how to make use of the leverage what the broker is providing you, easily with the profits that you make, you can cover your brokerage as well as the profits you can make. But please remember, you cannot keep 1:1 risk reward, right? And the risk cannot be just 30 points, 40 points. Minimum 100 points is the risk. The course which I'm working on right now for you guys, the risk reward for it will be around 1:3, 1:4. So 50% of the time, even if you are successful, easily you can recover the brokerage. Also, you can make profit. I'll be giving you step-by-step rules as to what is going to be the risk, where to take entry, where to exit. All of those things I would have explained. Every time you win, if you're making more money, definitely you can beat this. When I launch the course, you guys only will get to know. Traders, I hope by now you have understood while trading in crypto market, you cannot keep 30-40 points risk. Minimum risk should be 100 points. So always when you trade, you have to also take into consideration about the brokerage. Brokerage is calculated based on the volume. Now here I have traded with 100 units. For me, brokerage is around $7 and for buy $3.5 for exiting, right? Total $7. Now if you trade with 200 counts, what is going to be your brokerage? It will be approximately $14. If you trade with 50 units, what is going to be your brokerage? Your brokerage will be somewhere around $3.5. More than worrying about the brokerage, you need to worry about your risk reward. Every trade that you take, the risk reward should at least be 1:2, 1:3. There you can recover this brokerage amount. Alright. Traders, here you can click and see what is the brokerage fees. There are two kinds of brokerage. If you are market maker, your brokerage is less, around $0.02, and if you're market taker, your brokerage is $0.05. What is the difference between these two? I'm going to explain that. Now, whenever you place a limit order, you are a market maker. That means, let's say I go here. In limit order, what we do, we choose our entry price, right? We are not going to enter the trade at the current market level. Let's say I want to enter when this breakout happens. So when I click here, just see what is the best offer changing to. I'm clicking somewhere around 67,142. What happened here? Best offer changed to 67,142. So when I click on buy, this order will get executed. Now since I'm placing a limit order and I'm creating liquidity at this zone 67,142 price level, I will be considered as market maker because here I'm creating liquidity. That is why when I place limit order, brokerage will be less. Who is market taker? Market taker is already people have created liquidity here. So if I'm entering the trade at the current market price, I am market taker. So for market taker, the brokerage is 0.05. So in this case, if I had executed a limit order, my brokerage would have been 0.02. So you can say approximately for same 100 units, brokerage would have been, let's say $3 or lesser than that. But since I entered at market price, my brokerage is 0.05. So this is the difference between the brokerage that you need to understand. Rest what you need to know. Sometime back, I think I told you, right? At the market price, I'm entering. When I click on buy, here you can see there is something called estimated liquidation price. This is very, very important. Here what it says, estimated liquidation price 64,534. So what is liquidation price means? First I'll mark this 64,534. Where is 64,534? It is somewhere here, right? Let me mark this. Okay. Now you can see how far this level is. Now what is liquidation price? Liquidation price means for the capital what I have, what margins I have right now, it is $268. I'm entering a buy position. But let's say by chance, market moves towards the downside and reaches 64,530 level. That means without me exiting, the system will automatically exit. This is equal to 95% of my capital what is there in the account. You see in our market before 315, 320, your broker automatically square off your position, right? Here also when market goes opposite to your trade, 95% of your capital you have lost during this reversal because we entered buy. Market is moving down. So near this estimated liquidation price, the system will automatically square off. So you will lose the entire amount. What is the importance of me saying this? Let me tell you. I told you have to take very less leverage, right? Now since I have taken leverage of 25%, my market liquidation price is too far. But let's say I change my leverage to maximum 200x. Okay, I set this and I choose 100%. I have taken maximum leverage what they are giving, right? So when I execute a buy position now, here you can see estimated liquidation price has changed to 66,836 rupees, right? 66,836. Where is it? 66,830 somewhere here. So if I place this order by chance, if market just comes here only since I've taken so much unit, 95% of my capital only in this moment only I will lose. In that case, my entire capital will become zero. What I bought here, all my money will come to zero. In this one single trade, easily we will lose all the money. For taking the next trade, we will not have capital only. That is the reason you should not be taking more leverage. Any sudden spike also, market will automatically square off your trade without you exiting. This is something you need to be very careful. But when you trade with 100 units, you see where is market liquidation? Only at this zone, your capital can become zero. But when you trade with more units, small spike only you will lose the money. Okay. So please avoid taking 200% leverage. Stick to 25% and the maximum unit that you need to trade in will be 100 units. This is your initial stage. Now traders, when I was speaking about risk reward, in all the examples, I considered only 100 units. But let's say you took 200 units. That time, if the market moves opposite to your direction by 100 points, how much you will lose? Not $10, right? It will be $20. $20 plus the brokerage, because brokerage is calculated based on the units. For 100 unit, if the brokerage is $7, then for 200 units, what will be the brokerage? It is going to be $14. So if market moves opposite to your direction, 20 plus 14 will be 34. That is going to be your final loss after the brokerage if market goes opposite to your direction. Now same way, if you have taken 200 units, if market moves up by 100 points, you will be making $20. In that $14 will go for brokerage. So balance, you will be making $6. Now if you choose 50 units, if market moves down by 100 points, your loss will be only $5. If it goes as per your direction, your profit will be $5, and the brokerage we have seen around $3 brokerage we have to pay. So your overall profit will be $2. If it goes opposite to your direction, your loss will be $7. So this is something that you need to understand. All the examples I have given for 100 units, but when you choose 200 units or 50 units, 300 units, the risk reward will also change. Brokerage also will change. Okay, let's go back to the video. Now traders, after we record the video, my team told I did not mention how to place stop loss and target triggers. Let me show that to you. Continuously this area is acting as resistance. Now let's say I take a trade here. Doesn't matter buy or sell because this is just a demo thing. So I will just take 10 units. I'll sell this and I'll place the order. Now you can see I have entered the trade. If I want to close the trade, I can close it by pressing here. You can see the close position. Let's say I want to set stop loss and target for my trade. What I'm going to do, I'm going to go to the position section. Here I'm going to choose what is going to be my stop loss and target. Stop loss, let's say this resistance area 67,600. 67,600. I'm going to choose market order. Okay, and I will confirm. So you can see what happened. Stop loss level has been decided. Now I can set target. So target, what I can set, let's say 67,300. Okay, 67,300. This is my target. So in both the condition, you can see I have placed what? Market order, right? Why I place market order is because in crypto it is volatile. So as soon as the market reaches our level, the trigger has to happen. In this volatile condition, if you set limit order, there is a chance your order might not get triggered. That is why you have to set market order. If you want manually, you can exit your position. Next thing what you can do, your stop loss, what is here? Let's say you want to get it down. You can get it down here. This time what happened? Your stop loss got updated. Okay. So when market quickly moves here, you will exit. The same thing with target. When market comes to this target level, this is the target what I decided, right? You can see that highlighted here. So when market comes here, my target will get triggered. At market price, I will exit. Since I have revised my stop loss, first I kept stop loss here. Now what I did, I took the stop loss and I made the adjustment. When I made the adjustment, whenever market just reaches this green level, my stop loss will get executed. So this is how you need to set trigger stop loss for your trades. I told you, right? 100 points easily the market will move. Minimum you have to take 100 points risk. So if you don't take, many times the market might hit your stop loss. Now setting trigger stop loss is important because crypto market is volatile, isn't it? So ensure previous resistance or 100 points, that has to be your stop loss area. Please set triggers and let it be market orders so that it gets executed. Anytime I want, I can go here and I can modify, or here also I can quickly change here or this range. Let's say simply for this case, I keep this as my target. Okay, this got updated. So by chance market comes here, in the market order my trigger will get executed, and in case you want to manually exit, you can click here, you will close your position. See, I closed my position. Previously we took 100 units. For that $3.5 was the brokerage. Here for 10 units, 0.35 will be the brokerage, because like I already told, in crypto market your brokerage is calculated based on what? Based on the volumes that you are trading. So this was about trigger, stop loss and target. Let's go back to the video. Okay, to summarize, instead of options, trading in futures is better, because if you identify the trend, you can capture a decent move in the market. Of course, the brokerage is high. Second point, for every down move, or you can say opposite direction, let's say you are thinking market will move towards the downside, it will move down by 500 points. If 500 points movement come, you will be making $50. If your target is 300 points, you will be making $30. So every 100 points you will keep making $10. Same way, if market goes opposite to your direction, every 100 points move will be $10 loss. In both the cases, when market goes as per your direction or opposite to your direction, you need to understand for 100 unit, the risk for your trade is going to be approximately this amount plus brokerage. Brokerage will be $7. So if you make $50 here, from $50 minus $7, you will make $43. 200 points if you lose, you are going to lose around $27. Okay, so by now you would have got an idea as to how much profit, how much loss in dollars you will make or lose. The next thing, do not take too much leverage. Stick to 25. That would be more than sufficient. Stick to 100 units. That would be more than sufficient. If you take more leverage, your estimated liquidity price will be very close. So automatically your positions will square off and you will make loss. But when you trade with less quantity, your estimated liquidation price will be far, so that the system doesn't square off your position quickly. So all of these things are some of the basic things that you need to learn. Now one more advantage you have when you trade with Delta Exchange. So if you take minimum 7 trade out of 15 days, you will get around 1250 cash back. So this is one offer, you can make use of this. Now if you are trading in Ethereum, now here you can see Ethereum, it is trading at 2608 or 10. In Bitcoin, for every 100 points you will make $10. For every 100 points market goes opposite to your direction, you will lose $10. But when you trade in Ethereum, since its value is less, for every 1 point move opposite direction, you will lose $1. So every 1 point move as per your view, you will make $1. So here market is going as per your direction. For every 1 point, you will keep making $1. If market goes opposite to you, you will keep losing $1. So please be aware when you're trading in Ethereum market, here you cannot keep 100 points as risk. Maybe 10 points will be the risk. For that 20 points, 30 points, like that you can target. Okay, to a certain extent, I think I have covered all the important points. In case you feel I have missed any important points, let me know. I'll be more than happy to answer these questions in the next session. So traders, I hope this video was useful. If you're not joined our community group, please join. When we launch the course, you will get access to those courses for free. Apart from that, you will be added to the community group where I'll be sharing interesting setup both for intraday as well as swing trading. This is exclusive for crypto. The link will be provided in the description box below. Okay, I think I've clarified all the doubts. I hope this video was useful. Thank you for watching. I'll see you in the next one.